Welcome to Bears in Exile. Today is September 21st, and it is time for the market overview, looking at the Dow, SPX, VIX, XOI, TNA, UUP, FXE, GLD, and SLV. And we had a fantastic day in the market. What we thought would happen happened, and it was just wonderful. There was no QE3, which we've been saying there would not be QE3. Instead, we did get the Operation Twist with the Fed purchasing 10 and 30-year treasuries, trying to lower the interest rates of long-term big-ticket items. Maybe a smart move in the long term, but certainly in the short term it was not what the market wanted, and that was great. Here we are with the Dow, big, ugly, red bar, continuation candle, rejection from the bar, which we were looking for, and short-term moving averages pointing down once again. Secondaries, CCI clicking down, both the stochastics clicking down, 14-day RSI, moving average rounding out, downtick on the RSI, downtick on the histogram, downtick on the MACD. Fantastic. This is wonderful. We're now well below the major price consensus level. Broke through that puppy like butter, and it just is wonderful. All of our time frames look poor, which is good. The 180, everything pointing down. 60, everything pointing down. 30, everything pointing down. 15. Everything pointing down, with the exception of the 14-day RSI moving average, which is sideways, and heck, even the 5-minute, everything pointing down. This was just wonderful. So now, what are we looking for? Well, I mean, this is just the first candle in the real down move after a failed bar test. So I would expect the lower price consensus level to be our first stop. And it's a good bit down, just above 10,900. Actually, it's only a couple hundred points, so it's not that far away. But a lot of people will be thinking that we'll be testing the recent lows, the floor, and that is entirely possible. But I would like to see what the reaction is overseas overnight before really committing to that. But certainly on our first black box, it's saying somewhere around the area of 11K, which would be just fine. And it's actually more conservative than my feeling of 10,900. But if we do break down, we go and test the floor, we bust through it or something, you know, we'd be looking at 10,200 roundabout with the extreme and the major trends. So, but that's way down the line. SPX, same exact thing, got through the major price consensus level, have a good ways to go before the lower price consensus level, which does line up with the previous low. We did break out of this channel or bear flag today, so fantastic. This was a very large move today. Could we have a green day tomorrow? Well, sure we could. And actually, if we're going to have a considerable move to the downside, at some point it would be entirely natural to get below this line, turn around, go up, test it, and then fall away from it. So I'll be looking for that. It's early, so not overly concerned about that. All of our time frames are ugly. I won't rehash that. Going on to the VIX. This is really cool. We were sitting on the bar, and we finally have left it. Notice that we went right up to the major price consensus level and are kissing it. We ended right at it today. So a breakthrough that will be positive. Potentially could be a textbook guppy entry if we get a nice separation as we bounce away from the bar. And everything clicking up. with the exception of the 14-day RSI moving average, which is evening out. So very nice looking chart. TNA, bleh. Now, this one is even uglier than the down the SPX because we don't have much of a range to work with. Beyond that, we broke through the major price consensus level. We broke through the lower price consensus level. Short-term moving average is pointing down. All of our secondaries clicking down, and we're almost to our floor already. So if this busts through the floor, I mean, potentially it could end up sucking the Dow and the SPX with it, and so that is extremely interesting. UUP, the star of the show, has been for a while now. We didn't get any more bills being printed, so the worry of diluting the dollar went out the window. We are pretty definitively above the 200-day moving average now. Yesterday we had the hammer. Today we have a mega hammer, and of course everything pointing up. All of our secondaries pointing up. They are getting pretty high in the 14-day RSI moving average and actually everything. So will we get another test of the 200-day? I don't know. It seemed like it would be natural, but we will see. Certainly, if we look, historically, there is all kinds of room to move to the upside because, boy, what have they done to the dollar? Yeah, we have all kinds of room to move to the upside. So, see where this one goes, but this is nice as well. And if we're going to be entering into a really good bear phase, strong dollar would be nice. I guess it'll depend on if Euroland starts to start printing. And FXE, very nice. We have a yeah, it's not really a inverse hammer, it's a shooting star. So not good. Everything pointing down. Complete perfect inverse of the dollar, and we've had these mixed signals the last few days, and each time we've said we're going to stick with the short-term moving averages and being below the 200-day moving average. That has panned out extremely well. So I'm sticking with that, and our secondaries agree with it now. With the exception of a slight uptick in the MACD histogram. That's kind of interesting. So anyways, moving right along. GLD. Yeah, we have an inverse hammer. It is still sitting on the bar. We don't know how long it's going to rest there, but that it didn't go lower is great. Been nice if it had gone higher, but our secondaries are still clicking down, and we've been following these for weeks. So that it hasn't moved significantly down into the bar or anything is great. It's showing that gold does have plenty of strength while the indicators reset for the next run. And SLV, been saying that it will be staying in the bar to collapse and create a double flatline. Yeah, red candle today, but the moving averages are still all contained within the bar. So and everything clicking down with the exception of the fast stochastic and the CCI, but it's doing what we're expecting it to do, and that's good enough for me. So long as it does not break the major price consensus level, I am completely comfortable with it doing what it's doing, although I do not like double flat lines. So anyway, there it is. We have to see how far this retreat is going to go, and if it's able to bust through the lower price consensus level, at which time it'll be time to reevaluate the secondaries and the moving averages and see what they tell us. So there you go. That's it for tonight, and just a really nice day to see it do what it should have done. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.